All right. Good morning, good afternoon, good evening from wherever you are. This is how the strategy works. All right, and this is how I want to explain how the strategy works here in details, so that we all know when to enter, how to enter your trade. But first, before we, but first, make sure your setups, your screen is like this. You understand? Just all these indicators have to be in place, and everything is like this before now going to how it works and how it doesn't work. But first, let me check my trade in MT4 and see how it's going. Okay, it's going well. Okay, let's continue. Okay, let's continue. So like I said, this now first first and foremost, these indicators, this red line here, which is the ADX. Whenever the ADX is pointing upwards, it means the market is coming down. Whenever the ADX is pointing downwards, it means the market is going up. In whichever direction this ADX is pointing is the opposite of the trend. It points opposite the trend, opposite the market trend. If the market is going up, the ADX will be pointing down. The market is coming down, ADX will be pointing up. You understand? So it shows you the ADX and the market, or should I say the candlesticks, they always do or the trend, they go in opposite direction. But the stochastic move with these stochastics move with the same direction of the market, or should I say of the candle. So whenever you see the stochastic pointing downward, I mean, that means the market is coming downward. See the stochastic pointing up, that means the market is going upward. The stochastics is this green or sky blue and white line that are moving together. That is the stochastic. You understand? And the red line is the ADX. And then this yellow or orange lines are the MACD lines. Then the sky blue line on top of it is also the MACD signal line with about plus the MACD straight lines. Then this other one here is the MACD signal line. MACD signal line. So and then this arrow pointing here is these are the fractals. This arrow on top and beneath the candles, these are the fractals. We call them fractals. So when that is said and done, one thing then you need to look out for is to, before you place a trade here using these indicators, you need to go to use your MT4, as in I say MT4, 4 hours time frame, 4 hours time frame to check the trend of the market. When you get the trend of the market in 4 hours time frame, that's when you now come to 15 minutes time frame to place your trade, to look for setups that corresponds with the direction in the 4 hours time frame, then to place your trades in the 15 minutes time frame. Now, how do we know when to enter a trade or when to sell a trade, when to enter or to buy? Like this place right now, like this, you see this place where this crossbar is now. You see that the ADX here is pointing downward. The stochastic is as exhausted, is pointing upward. You see that one now, just a typical example. It's telling you now that this is a buy setup. That's a buy setup. And then if you want to buy, firstly, you not buy in that this first candlestick here. You buy in the second candle. When the second candlestick opens, like here, like this now, like here, like this now, and then this ADX and stochastic are still maintaining the same posture. As in the ADX is still pointing downward, it has not changed. The stochastic is still pointing upward, it has not changed. That's where to place, enter your buy. That's where to enter a buy. And when you want to enter a buy here, you come below this arrow here, or below the first candlestick that opened, and place your stop loss. Either place your stop loss below. The best way to best place, the safe place to place a stop loss is below the previous arrow. That indicates the level, as in that the resistance or support. The arrow is indicates a resistance or support level. So if before you can place your stop loss immediately below the first candle, the first signal candle that opened before you enter your position in the second opening candle. You can place your stop loss you can put your stop loss in this first candle that opened up. You understand, below it, or you can put it below this arrow, below this resistance, this support level here that this arrow is showing us as indicated for us. So now, but note the entry. It had these two indicators, the ADX and the stochastic, has to maintain the same posture. You understand, the same angulation that tells that this market is still open for a buy. You understand, it has not changed. But once the ADX change position, like start pointing, instead of downward, start pointing upward, then you know the market is changing. But note, this is what this is the criteria this is what you need to observe in the higher time frame, like the 4 hours time frame, and use it for an advantage to trade, to make the most profit in the lower time frame, which is the 15 minutes, which is the 15 minutes time frame. So, and then this where this MACD comes in play is to show you mostly the trend, and where the market is, the flow of the market. You understand, the flow of the market, because as this MACD is here now. You understand, when it got up here and turned, you know that the market has changed. It's about coming downward. It's about going bearish. It's about going short. You understand, when it gets give you this sharp turn here, you know the market is about going bearish. And once the market turns like this in 15 minutes time frame, you know that it's about going down. And the stochastic at the MACD line, the signal line, most likely will want to touch this level 10 here, this oversold level, before it will now make a reverse. You understand? But that depends on the position of the higher time frame. So now let's go to the higher time frame, which is the 4 hours time frame, and see how this works. If you note, this has been this is a uptrend. If you see this an uptrend, if you don't draw your trend line now, you see that this enters the uptrend. For instance, if you want to draw our trend line here now, you see that this is an uptrend using our the fractals, the arrow beneath the candles. You know, if you see that this is clearly an up, this is clearly an uptrend. This is an uptrend that has been, the market has been going, the flow has been up, so this is an uptrend. So now, how would you detect that this market today will be an uptrend so far? Because now it seems here now we'll see that this is like the market is breaking out of the trend. Maybe the market is changing. We're having a breakout here, which tell us the market is like changing or want to start going down bearish. from bullish to bearish trend. But this first uptrend, how do we know it? Because we have to trade according to the trend. Follow the trend. Place your trade according to the trend. Never trade or enter a position against the trend. Always follow the flow of the trend. That's how we make most of the profit. So I'm going to take out this line, this line now, so that we'll check more in the higher time frame, higher 4 hours time frame. So this 4 hours time frame now, if you check, use your crossbar, check where my focus now is in the time here from below. Let's say the first candle that opened today is this is the first candle that opened today in 4 hours time frame. This is the first candle that opened today in 4 hours time frame. This is the first candle. This is by 000 hour. That's 12 midnight today. That this candle, the first candle opened 12 midnight today in 4 hours time frame, and the position of that candle, which based on the indicator, is bullish. You see the MACD is pointing downward and the stochastic is pointing upward. That means we have a bullish trend in the 4 hours time frame, which is a higher time frame. When this is done, when this is clear, when you are clear on that, first and foremost, that's the first thing to do. That's the first thing you have to do, to check the higher time frame. From the higher time frame, you now know the trend, where the market is going, the flow of the market, the direction of the market, so that is what you now follow in your lower time frame, which is the 15 minutes time frame or 30 minutes time frame, or most likely 1 hour time frame. But I'll choose 15 minutes time frame to minimize if there is any possible losses, it will be minimum. It will not be much, because the time frame is a smaller time frame. So you would know the trend and then use it for your advantage in the lower time frame. You know the trend from the higher time frame, which is the 4 hours time frame. If you're trading, if 1 hour time frame is your own time frame you're using to trade, you can use a daily time frame or weekly time frame to check, to know the direction of the market on a daily basis or weekly basis. Then from there, use it as an advantage to trade your 1 hour time frame. If you're a daily trader, you trade a 1 hour time frame. You can use one weekly time frame to know which direction the market is going for that week, and then flow along with it. You understand? Like that. 15 minutes. I use 4 hours to trade 15 minutes. That is my own. That is peculiar to me. I don't know about any other person. So once this is established, you know that from the beginning of this day, once you come, you see that this setup is bullish. You understand? This setup is bullish. It's really bullish. That's one. Secondly, again, now come back to the MACD. You see the MACD has gotten to oversold level, which is 10, and the MACD have made a turn, and the MACD signal line is also pointing upward. You know that this is a potential bullish trend at that point. So when I now go to 15, note this is from 12. If we use this our crossbar, check it from here, from 000 hour. Then we will now go back to 15 minutes time frame, and then if you check, the 000 hour should be from here, should be from this line here, obviously from this line here, from this line here, this 000 hour. Then now we'll be looking for a bullish setup. You understand? A setup where you can enter your buy, because we have already established in the higher time frame that this market is bullish. It's going bullish for the time being, until it gives otherwise. It's going bullish. So you now come in the 15 minutes time frame to look for a bullish setup. You now see this place right now. You see this place right now, and this is a bullish setup. You see this first candle is a signal candle. You don't enter a trade on the signal candle. You enter a trade on the second candle. You always remember to enter a trade on the second candle, not third, not fourth. The second. Entering the third candle or the third or the fourth candle the risk is high of drawdown. So always you always try to catch the second candle. Always try to make sure you catch the second candle. So this is a signal candle right now, which gives which is saying that the ADX line is pointing downward. Stochastic is also facing upward. You understand? The MACD line is also facing upward. And then now this is now your entry candle. This is the entry candle now. This is the entry candle and everything is set. The MACD ADX line is still pointing downward. Stochastic line is upward, and MACD line, ADX line is down. Stochastic line is upward, and the what do we call it? This MACD line is also pointing upward. But the major point of focus should be the ADX and the stochastic. So now when you now enter a trade, enter your trade. Once you enter your trade, enter your trade here. Once you enter your trade here now, if you enter your trade here now, place your trade there, and then where you should place your stop loss now should be either below this signal candle, below this signal candle, or below this the previous arrow that opened, that which signifies that's where the support or support level is. That's where the support level is. You understand? So those are the two places. Either you place me myself, I'll place my stop loss in the below the previous, below the signal candle, because based on my research and experience, the market does not ever go back to break that line, that below the signal candle, because any market that goes and break the signal candle most likely want to continue going, want to return and continue going bearish or bullish as the case may be. So I would rather it cuts me, it triggers my stop loss with the shortest loss, with minimum loss possible. You understand? So most times that is where I'll put my stop loss. But to be safer, you put it in the previous support level, because in most cases it doesn't hit, your market will not get there. It will now reverse turn and still continue going in your direction. So please note that, and that is that. If you check now, this is the first one, bullish. We'll have another one here. Okay, this one wasn't good, because the ADX was not pointing downward. You understand? ADX was pointing downward. It's not corresponding. So once it's not corresponding here first, once the ADX and the stochastic is not agreeing, you ignore it. Completely ignore it. Don't say to enter a trade to see how it would be. Completely ignore it. When you see now, when they agree as at this, like this now, when they agree like this, you see down here, the ADX is pointing downward, stochastic is pointing upward, and then you have the signal candle, and then you have then this is your entry candle. Now they are still, ADX is still pointing downward, stochastic is still pointing upward. Now enter your trade, and then place your stop loss and your take profit. And then secondly, for a safer trade, once you place, enter your position here, and then you place your stop loss below the signal candle or below the last fractals, which is the support level. When once your entry candle close in profit, once it closes in profit, anyway it closes in profit, always remember to move your stop loss. And then when you enter a trade, try to enter at least 2 positions or 3 positions according to your capital. You understand? And then once this candle closes in profit, take 2 profits, close 2 position on profit. Just take it and keep it, and then allow 1 position to run. And that 1 position you're allowing to run, you move your stop loss from here and then place it a little bit above your entry position. Understand? And then allow the market to run. Allow the market to run. The market that a market that is going to that is going to run well will not return. It will not trigger that your stop loss. It will just go ahead for you. It will just go and then give you nice profit. But market that wants to do some shenanigans would come back, trip it, will come and trigger your stop loss. But at least it triggered your stop loss and then it left you, close you in some little profit. But why? But you've already closed like two positions in a reasonable profit. A reasonable profit. You understand? So that is how you make most of the market, most of the profit, most profit in forex trading, because this market cannot be fully predicted. Even sometimes, even if the market will go into your direction, it might want to first drag you first to some drag you down, and then if your account is not strong enough, it might want to drag you out of the market before now turning and going to your direction. And by then you're already out of the market. But it's good to catch the market and then wait for it. Well, as in before the market wants to play that fast one on you, you've already played a fast one on the market already. It's good to be smarter than the market. You understand? So when that is done, you leave the market to run. In a situation like this, where the market now came back to take out that profit. No, remember that what we are looking for is only bullish entry and setup. You see, it's okay, no problem. And then you come here. This could be a signal candle, and then you then this should be entry candle, and then you see that this you would have entered in this entry candle here, but now the ADX is correct, MACD is correct, but the stochastic as at then wasn't really correct. Stochastic wasn't really correct, then it has not fully turned to face upward. You understand? But while as the MACD was pointing downward, that it's a good a good sign, but not good enough. You have to wait for your stochastic to also turn to that direction as well. Let the stochastic and MACD and the ADX be pointing in opposite, completely clearly opposite direction before you now enter before you enter a trade. And always remember to enter in the second candle. You understand? The first candle is the signal candle, and then the second candle now is the entry candle. Then the first candle will now be used for below the first candle. Now that's where you place your stop loss. And then mostly when you take your when you the most ideal place to always take profit is when the exhausted, when the stochastic have exhausted on the overbought or oversold level. You understand? But we'll get to that later. So when you see like this now, you could me now, if I was trading, this way I would have entered this trade. I would have entered it here because of this bullish candle, as in bearish candle that was here. I'll now take this candle as my signal candle, and then this is my entry candle, because of all these lines are now are very clearly positioned, even with the MACD. And then I would make this nice profit here, and then before I close. And then another entry again that was clear is this one here. We have see your your signal candle. Have your signal candle here, and then we have the entry candle here. Have the entry candle here, and you also see down here that everything was in line. The ADX is pointing down, the stochastic is pointing upward. You understand? And then it's a nice place to enter there, and then enter your enter your position here, place your stop loss here, put your top loss here or here as you choose. Here is the safest place to place the top loss, below the fractals, which is below the support level, the very previous support level, or below the signal candle. It's also two places you can place your stop loss. You understand? So that is that for that, and then watch your trade, and then see how the trade goes. And then if the trade goes fine, then once you see your stochastic is exhausting, it's exhausting like here, like this. You see the mouth, the two stochastic. Okay, like you see, like this place is now. These two, the white line and the sky blue line, as they have gotten close together, almost to make a crossover. In a case like that, that's where the strength of the stochastic has exhausted. That's a good place to also take the profit, whether it's bullish, whether it's a buy position or a sell position. If it's a buy position and then the stochastic has exhausted like that, or the MACD has turned to another direction, it's a good place to close the trade, take your profit, close the trade, take your profit, and close the trade, take your profit, and wait for the next opening. You understand? So um I hope you understood everything I said here very well. And then make sure your screen is always by the far corner like this, so I get things, so that things will be very, very clear for you. Like now, this would